Good afternoon. My name is Alex Piroglu. It is September 15th, 2014, here in London. I'm with Gina Martin Adams from Wells Fargo. And Gina is about to present at the London chapter of the MTA to give the presentation for our monthly meeting. But prior to that, we will be doing a short interview to get to know Gina a bit more. So, Gina, would it be possible to give us some information about your personal educational background before getting involved with technical analysis?
Sure. I received my undergraduate degree in a bachelor's in finance and marketing from the University of Florida many, many years ago. The number not to be mentioned. And after that, went to work for a company called First Union. Pursued the fundamental designation, the CFA, first. Got my CFA, thought about getting an MBA, but then was offered a position as an economist in my firm. Was working as an economist for several years and had a very difficult time in forecasting several commodity price charts using fundamental analysis. So started to look at charts and look at trends on my own accord, and that led me into technical analysis and the CMT.
Got it. So obviously, so you've half answered my next question is how did you get involved with technical analysis? Obviously, so if I understand correctly, it was your decision to have a better clarity of markets through charts rather than through fundamentals.
Yeah, I found that we were having a difficult time forecasting several different measures, mostly in the commodity price complex back in the mid-2000s when oil prices were accelerating rapidly, natural gas prices accelerating rapidly. Even using demand and supply dynamics, all the supply constraints were not enough in our models to explain what was happening with the price. So I naturally started looking for other reasons. What could explain what's happening with price? What could improve our forecasts? And that led me to
technical analysis. Great. So could you please describe your day-to-day responsibilities and what is the most challenging part of your work?
Okay. I'm an equity strategist now, so my responsibility is to have a view on where the S&P 500 is headed and how to invest within the S&P 500. So sector and industry allocation recommendations within the S&P 500 is where I focus most of my efforts. There's a number of things I could say that are the hardest part. I'd say that the single hardest part is a point estimate on where the S&P 500 is going to be 12 months from now, 12 months, 18, 24 months from now. But probably the biggest challenge is just finding enough time in the day. I do a combination of research and marketing and media, and just juggling everything is probably the biggest challenge.
All right. Since you mentioned media and marketing, what do you think, from your experience, is the public's professional, actually not public, the professional community reception of technical analysis? I mean, do you try to disguise your technical views, give it some fundamental, or are you outright technical analyst?
Outright approach my job through a fusion of both technicals and fundamentals. So all my clients know that I'm both a fundamental analyst and a technician, and I attempt to combine the two to provide sort of valuable opinions regarding investment prospects. My perception is that the vast majority of fundamental analysts that I run into are actually closet technicians, as I call them. Most fundamental analysts actually do look at a price chart. Most technicians are now actually noting fundamentals as well. I mean, I challenge you to, turn on the television and hear a pure technician nowadays who doesn't oftentimes even mention earnings or mention inflation or mention interest rates in their discussion, because the two worlds do so naturally blend together. I mean, in my mind, technicals are a way of explaining what's going on in the world as well. Sometimes not just pure fundamental analysis explains everything. There's an X factor, and sometimes technicals explain that.
Correct. Actually, we did have a large conference in London a few months ago on fusion analysis. And Ralph Acampor gave a very good presentation explaining how, it's time for us to bury the hatchet, to put it that way, start combining things, and it made a lot of sense. All right then, Toolbox. What are your favorite tools and techniques? What do you specialize in? Because technical analysis, it's a broad world.
Right.
What's your tools you've picked?
I use pure price trends more than anything. I do look for confirmation through momentum and breadth indicators, usually RSI, some advanced decline, some percent trading above 52-week highs, 200-day moving averages, that kind of thing. But I use a lot of price, and I use a lot of relative price in particular, because my responsibilities do revolve around how to invest within the S&P 500. I use a lot of relative price analysis for sector and industry opportunities, and that's where I spend the vast majority of my time. So S&P discretionary sector relative to S&P, what's that price chart telling you?
Okay, so if I ask you to put that in a step fashion of, how do you look at the chart, for example, any kind of equity or share or sector that you're looking at. How is there like a methodology, systematic methodology that you approach, or is it something that you wait to catch your attention?
It can be a lot. There are a lot of different things that catch my attention. I'd say that what I do every single week is print out the absolute price level and relative price level charts for all of the sectors and industries within the S&P 500. And I actually print them out on paper because I can't analyze the chart as well as I should be able to on a screen. And the papers force me to sift through every single chart. And then I put moving averages on those charts, and I look for crossovers. I look for divergences on RSIs, so I'll even use a momentum indicator on a relative price chart to look for some divergences. But it's basically just sifting through chart after chart after chart of a relative price chart with some moving averages, looking for confirmation or non-confirmation, looking for strengths and weaknesses emerging.
So which people have been your greatest influences on technical analysis? I mean, if you had to recommend 3 authors or 3 books, which one would this be?
It's really hard to answer that question. I'd say that John Murphy's work is something that I'm sure a lot of people reference because it's a huge part of CMT, the CMT program. But his work on cycles and intermarket cycles in particular, I think, was really influential in my current work because it does so nicely lend itself to tying fundamentals and technicals together. As an economist, you're trained to think in terms of business cycles and drivers of business cycles. So it really easily brought my brain into technical analysis. And I use a lot of intermarket work on a daily basis. So I'd say his work comes first and foremost to mind. Another technician who had a very strong influence on me early in my career was actually Louise Yamada. Just because as an analyst starting out in this business, I saw her come in. I was on the other side of the business, on the buy side of the business, and she was on the sell side coming in and bringing in presentations. So I think her work was really my first exposure to a chartist. She's influenced me a lot. And the other one that comes immediately to mind is Robert Prechter, because Elliott Wave really appeals to another side of me, and I have I'm a demographer at heart, and so the way that he meshes patterns with socioeconomic trends in his current role, and the way that he kind of ties Elliott Wave into the psychology of individuals really appeals to me. I haven't been clever enough to find a use for it in practice, but I think eventually, hopefully, I'll get there. Those are just 3. I could probably go on for a lot longer.
Great.
With some ideas.
Technical analysis principles, if you could distill your knowledge in 3 axioms, for example, don't fight the trend or don't fight the Fed. 3 axioms, which would these be? 3 principles, key principles? 3
axioms. Oh, that's really good. I use don't fight the Fed all the time, but I modify it. Right now I say don't fight the channel. That to me is what the S&P 500's been trading in this price channel for quite some time. No reason to fight the channel, even though we're starting to see some signs of weakness underneath that headline trend. So I use that a lot. One of the other ones that I'm really fond of, and I don't know where this came from, so I can't source it, is to nurture your flowers and cut your weeds. I don't know where that came from. It's just always been in the back of my mind, and I think it's one of the sort of disturbing aspects of our business is we're always looking to cut winners and hold on to losers too quickly. And one of the great things about technical analysis is that it allows you, forces your hand to stick with a trend when it's working until it's not officially working, and vice versa. And so that statement always sticks in the back of my mind. I don't know if I can come up with a third one for you.
That's
I think two might have to do it.
Yeah, that's right. If you could give a call to 20-year-old Gina, I had a chat with her, what would you advise her?
Oh my gosh, that's a really good question.
That's the surprise question I was telling you before.
I think if I had taken the CMT and been exposed to technical analysis earlier on in my career, it would have really benefited my my practice. And not only that, but I would also tell that young Gina not to ignore what the price trend is telling you. Because as much as I talk that, sometimes I do have a tendency to ignore the price trend as well and try to fight against it. And so that's something that I would remind myself if I had the opportunity.
What is the worst call or trade you've done, and what have you learned from it?
Oh, wow. So last year, 2013, I had a terrible market forecast. I was really cautious in the face of what was a very, very strong bull market trend. I relied far too much on what my fundamental models were suggesting and ignored the price trend. So we've integrated a lot more price momentum into our fundamental models now. And certainly learned from the experience not to fight the trend.
Okay. Well, last question, fun fact. What does Gina do outside of market hours? I mean, do you have any hobbies?
Oh, is there time for hobbies? I didn't realize. I have a 3-year-old and a 1-year-old, so those two little girls keep me hopping. I try to play tennis as much as I can with my husband, which is something we're just getting into now that the little one is nearly 1. That's about all that I have time for, to be honest with you.
That's good enough. That's good enough. That's more than most people. Okay, so that's a wrap for today's MTA podcast. Gina's presentation and interview will be videoed and archived with the rest of the UK chapter presentations and interviews. And I think that's a wrap. Gina, thank you very much. We'll be seeing for your presentation.
My pleasure.
Thank you very much.